Hello and welcome back. It's the Stock Investor Studio with Dan Kraus. I'm your co-host Jeremy, but the expert here, Dan Kraus. I'd like to give him a little minute to reintroduce himself, as it's the second episode, but it's a very young podcast, as we know. So I wanted to let Dan reintroduce himself and why you need to be listening to what he's got to say today.
Hey, Jeremy, and hello to everyone who's listening. I'm Dan. I am the founder of the Stock Investor Studio. I've been in the markets for about 15 years. I've worked on trading desks here in New York City, where I'm currently based. I've been here for about 10 years working in Wall Street. Put together a bunch of courses, for people who are really wanting to learn all about the stock market, how to trade the markets, how to invest responsibly, how to make money over the long term. And I have a lot of different tips that I share throughout my courses, which will, hopefully help you to, learn the basics. And I really teach the basics from A to Z. I teach you exactly how to get started in the stock market and so much more. And I put those courses together. You can find them on my website, www.stockinvestorstudio.com. And I'm always, available for questions and to try and help you get going, to make sure that you do the right things when you get going.
Thank you. That's perfect. Couldn't have said it better myself. And obviously, the stock market being such a endless bevy of information, there's a lot of fakes out there. There's a million courses out there. Right. What we really wanted to do with this podcast was allow the viewer to better understand your expertise. I'm not exactly an expert. I know you are, but I would sort of fall in line with maybe some of the viewers out there. And, we wanted to talk today a little bit about the meme stocks and sort of just the general overlay of where the investment market has been in the past, where it might be today, and where you think it could be going. The big thing, obviously, in the last year or so, meme stocks. We hear a lot about crypto, and then there's probably people out there that have heard about, the decentralization and things like that, global markets. There's a million things that we want to talk about on this podcast, and we know we could talk all day long. But we really wanted to just introduce some of these things and start to open up the many layers, because obviously there's an endless amount of those layers. Right. So one thing just to get started with, as someone who's been in the markets, worked with some significant accounts and things like that, what led you to see something with these meme stonks, these sort of AMC things like that? What sort of drove you to create this new course?
Yeah, no, that's a good question, Jeremy. So yeah, I just launched this course on meme stocks, all about meme stock trading, how to find meme stocks, I think the most important thing trading meme stocks is to try and be early. And I try and teach that in the course. There's different phases of the meme stock cycle. So meme stocks, obviously exploded in the past year or so, a year and a half. Wall Street Bets is, a forum, like a page where a lot of people go to, come together and, throw ideas around, and they try and create hype, or memes around a specific stock and try and gather interest among these big groups to try and buy meme stocks and really just push up the price. So there's, I think meme stock trading has really exploded because a lot of people have got behind the movement and have actually found it a quick way to make money. And a lot of these people who trade memes have made a lot of money, but I think a lot of people have lost a lot of money as well. And a lot of people get caught. And I think new investors who come to the market who don't have that much experience think that it's, in a certain way, they think that it's a quick way to make a lot of easy money. And I think that's very far from the truth. I think trading meme stocks, because of the social media element or aspect, the trade or the meme can only live on the internet for as long as there's a lot of hype pushing that specific stock. And when that dies down, the meme stock price or the share price or the stock that people are memeing about, generally crashes and people start to lose a lot of money. So as long as the hype remains and lives on social media, meme stock trading will be very popular, around specific stocks. So point being, there's a lot can go wrong. A lot can go wrong when you trade meme stocks. And I think a lot of people think, and I found it an easy way to make money, but in fact, it's very difficult. It's very complex. It's very hard to find a meme stock. And it's even more difficult to be early in on the meme trade cycle. And I think if you are lucky enough to, spot a meme and be early enough, yes, you can make a lot of money, but only if you're able to sell it after a big rally. And a lot of people I see talk about, holding these meme stocks to the moon. And there's a lot of these expressions and terms that they use, like, holding these stocks to the moon because they think it's going to, go up forever and ever and ever. And that's such an illusion that people have wrong. And I really try and, want to help people understand that's not reality. That's not realistic. That's not how the stock market works. I've been doing this for 15 years and I've seen a lot of people make money and lose money. And a lot of people make money quickly in meme stocks, think that it was so easy to make money in meme stocks. I'm going to make more money and more money and more money by buying more of the specific meme stock, buying different meme stocks and holding them to perpetuity, because they think they'll just make so much money. It's so easy because a lot of people did make a lot of money from that. But the trick is really to understand, the psychology behind it, which I actually teach in my course as well, all the psychology, the different phases of the meme stock cycle, and the best point to get out of the trade, to bank your profits, hopefully before the meme stock crashes, which is, when social media really, eases off on posts, about a specific company that the meme is created on. So it's quite tricky. There's a lot more to it than just buy and make a lot of money, which has happened to a lot of people. It sucked a lot of people in because of the ease of it in the beginning. But I think people now are starting to learn and realize, as time's gone on, that it's not that easy. I think a lot of people have started buying new meme stocks and have actually started losing because they're late in the meme stock cycle. There's 4 phases of the meme stock cycle. There's the early adoption phase. Then there's the build up. Then there's which is like the pump phase. There's also the dump phase. And then there's the realization phase of like, what happened with the trade? Did you make money? Did you lose money? Why, how it all happened? And if you can try and understand where you are in the cycle, you're able to somewhat determine if you're probably too early, if you're early enough to make money, or if you're too late and it's not a good time to get in the meme trade. And I think a lot of people don't consider the 4 phases of the meme stock cycle. They just jump in regardless because I think it's an easy way to make money, and that's not really true.
Yeah. And I mean, just from my perspective, a few things that from my end of the non-expert, it's clear that, within that time frame where the meme stock movement sort of took off, we were getting a little bit of government money that might have been laying around.
Very, very true.
And then also the ability to do some of these things with apps like, Robinhood and some of these other options where, a kid with $1,000 would have never considered the ability to invest that money into a company.
Totally true. Yeah.
Even 3 to 5 years ago. So what do you think now that we've seen sort of the beginning, the launch of Robinhood and other sort of buying and selling of able apps, and some of that early adoption of maybe some kids had a little extra money laying around. How do you see this kind of working as we've seen the beginning? We've seen probably a lot of kids that ended up losing out, as can be assumed.
Right.
How does this all start to morph, as we look forward into the future? Because I'm sure there's a lot of people out there that have thought, wow, this was easy, or also, wow, that was quick.
Yeah, that's a good question, Jeremy. So I think there's a few things. I think that, yes, you're totally right that during the COVID pandemic, there was a lot of free stimulus money that came from the government to, the younger generation. And a lot of that younger generation worked in certain jobs and they lost their jobs and they were looking for new ways to make money. And a lot of the people were stuck at home and they're looking for new things to do. I think we spoke about this maybe in the last podcast, and these people all, took to the stock market. They had free money from the government, they had free checks, and they wanted to put it to work. And perhaps they bought some things online, and others might have invested into the stock market. And what a great way to invest, and be involved, through things like meme stocks, because it was a quick way to make money, because there was a huge momentum movement into particular stocks like AMC and GameStop. And now there's been a whole host of other names that have, that there are memes around specific stocks, and a lot of investors have flocked to those names. So I think that, a lot of people have obviously learned the hard way and got straight into the market by putting money kind of guessing which meme stock could work for them, may not work for them. And a lot of people got very lucky, made a lot of money. A lot of people made a lot of money and gave some back because they didn't bank their profits in time. And I think this is going to continue. I think the market now has millions and millions of new investors that it's brought to the market. And it's been a massive influx of new retail investors, people like you and I, people who just have ordinary jobs, middle income earners, low income earners as well, who never really had the opportunity to trade in the market, now have easy access through apps like you said, like Robinhood, Webull. There's a bunch of others that have now launched online trading apps where you can actually trade stocks for free. There's no cost to buy and sell shares. That was something that was introduced a couple of years ago, and it actually started with Robinhood. They got rid of all trading costs, so it's free for anyone to buy and sell shares. And this got everyone very interested. And so a lot of people put money into the markets and they learned, the hard way, a lot of them without any education, which is something that I'm very against, because I think that there's a certain way that you can invest your money, which, could be called gambling, versus something that, somewhere where you could really learn about the markets, understand the fundamentals of the market, how to pick good quality stocks, how to make money in the long term. That's really the way to invest. That's the best way to invest. And that's the best. You'll get the best returns over the long term if you have some type of education in the markets. Just jumping in because you actually can. It's very easy to just go to Robinhood, open an account, put money in, and buy Apple or buy Google or buy any stock you want, or a meme stock. In a matter of minutes, you can do that. You might make money on those trades, but is it necessarily the right thing to do that over the long term? 100% it's not, because you need to have an education. You need to have a grounding. You need to understand, good stocks from bad stocks, growth stocks from value stocks, high risk versus low risk. You need to understand the different market sectors. You need to understand that the market is cyclical. There's certain times to invest. There's certain times to pull back. There's times to, take profits. There's times to, over invest in certain cyclical stocks or non-cyclical stocks. So there's lots of stuff to learn and consider. And you learn this as you go, but you need to have a grounding, which is why I decided to make the course, because I just realized so many people were investing incorrectly. And a lot of people get very hasty. They just want to throw money at the market. And I think it's an easy way to make money by buying like AMC or GameStop in the past. And it did work out for so many people, for millions of people. And on cryptocurrencies as well. A lot of people just threw money at some cryptos with no knowledge at all, no due diligence, no research, but ended up making a lot of money. And they thought, and still to this day, they think it's easy. And I think over the long term, if you're an investor, if you think about it like this, you invest in 1, 2, or 3 things, you get lucky with all 3. They all go your way and you make money in all 3. As a new investor, you think, wow, this is easy. All you got to do is throw money at the market and you make money. But on your 4th or 5th trade, you're going to go a lot bigger than you went on the 1st, 2nd, or 3rd trade. And when you're in a lot bigger, that trade won't work out. And when that trade doesn't work out, you're going to give back all your profits that you made in your 1st, 2nd, and 3rd trade. So where are you after your 5 trades? You're back at square one with no profit. Okay. Now that's what a lot of new investors are doing. And that, they're running into that exact situation at the moment. Whereas if you have an understanding of how the market works, you've done some sort of online education, like I teach in my courses, I'm able to teach you how to avoid those mishaps and how to build over the long term, which is crucial to, success over the long term. So in summary, the apps have all made it very, very easy for everyone to access, which is great because now anyone can, invest in the market no matter how much money you have. If you have $100, that's enough. You can get started. There's no limitations. And there are many different apps, Robinhood being one of them. It's very, very popular. And it's just a great way to get invested. And I think as social media builds, around meme stocks, which is just a movement that's just really, created so much hype around the stock market, people are so interested to learn and do more. And that's going to just continue to bring new investors into the market. So I think there's going to be this massive growth in, retail investing. And I think the meme stock cycle or the meme stock interest is going to remain elevated for a number of years ahead.
Yeah, that's really interesting. A couple of things that you noted that I've sort of observed since, the Robinhood era. And, one big thing that I had written down was new, cool. And those two things are very important in our society in America and
Yeah.
obviously around the world in terms of like, wanting to get in first. And a lot of that, comes with gambling and the thought of gambling and that sort of rush. Do you feel that some of this, the dark side of what you may be seeing from your expert opinion, do you think that some of this, as you mentioned, gambling versus learning, how much of this do you feel is a little bit of that kind of wanting to be cool, wanting to get in? Because now I'm starting to see not only crypto that we've seen, Bitcoin Cash, some of those, well-known cryptos. I'm now seeing NFTs, and I'm seeing on Twitter where, the Bored Ape NFT Club, and we have artists that, and I'm following along. I'm trying, but there's no way that
you should be. You don't get left behind, right?
Right. And there's probably a lot of kids out there that are seeing NFT crypto. It's so easy. Oh, I made this, I made that. How do you see that kind of all working into the market? And, what advice, I guess, do you have for people that might be seeing this cool NFT stuff everywhere?
Yeah, look, I think NFTs are fascinating. It's been, a lot of artists, as you say, have made a lot of money from, selling NFTs, digital art, etc., digital clips, digital images. And crypto as well. Crypto has made thousands, if not hundreds of thousands of millionaires very, very quickly. It's never been seen before. This type of wealth generation, this type of wealth movement has been so rapid, literally in the past 12 months, 12 to 18 months, I'd say. And I think a lot of people probably feel left out. Did I make a lot of money on crypto? No. Have I been invested in Bitcoin for the past couple of years? Yes, I have. In hindsight, I wish I went a lot bigger because, the way it's just skyrocketed. Bitcoin currently around 60,000. It was about 65 a couple of days ago. So I think, there's just so much interest in Bitcoins, NFTs, meme stocks, but I just think it's so crucial to understand that you're investing money. It's money that you've worked for and it's money that you've earned. How do you want to invest it? I think you've got to ask yourself, are you happy with losing that money? Fine. If the answer is yes, and I'd imagine the answer is no, but if you're happy to just gamble it away and just, throw it at something and hope it sticks, for example, buying a meme stock that you've never heard about, that's a penny stock that, hype and interest is just living on the internet, and it's a tiny company with no proven, products or strategy or, future earnings or future revenue growth. You're really risking a lot of your investment. And the chances of you making money on that are very, very slim. If you happen to make money on that, I'd say it's down to luck. Same goes with cryptos and NFTs. If you just throw money at a certain crypto or a certain NFT, you're pretty much hoping and praying that it works out, right? Unless you've done your research and you understand how the whole, how it works just overall in general. So if you do your research and you study and you spend some time understanding, what NFTs are, how do you invest in them? What are good NFTs versus bad NFTs? What are you investing in? Why should the asset, why should the NFT appreciate in value over time? Will the specific NFT or crypto appreciate over time? How do you know? So without knowing those answers, how can you guarantee or invest with confidence? I think the answer is you can't, and it's very difficult, right? If I'm going to buy Google or Amazon or Apple as a stock, I'm able to look at all their past, their past revenue, their past growth rates, their past margin numbers. I'm able to look at their dividend. I'm able to look at their future growth, their expected growth. There's a ton of things that I'm able to look at and decide this is a growth company and I want to be involved, right? There's a lot less risk. It's a large company. It's a global company. They're already dominating. They've got exciting products, services, whatever it may be. I could sleep a lot better at night knowing that I'm invested in Amazon, Google, Apple, etc. Not to say that I'm against, small coins or some cryptos or NFTs. I think a lot of them are probably great investments, but it doesn't mean that, it doesn't mean that you can just throw your money at any NFT or any cryptocurrency or any stock for that matter. There are thousands of stocks that are public trading companies that, are really bad companies. There's no growth. The management team is terrible. And likely those companies will not be around in a couple of years and you could lose a lot of money. So my point being is you have to do your research. You have to understand what you're investing to, and you have to take it seriously. It's not something that should just be taken lightly and say, oh, I saw a funny meme about crypto X or, NFT, or stock, stock XYZ, and you just throw money at it. You might as well just be throwing darts at a board and saying, what should I put my money in? So again, point being, you've got to do your work. You've got to understand what you're investing in, especially if you want to, keep your initial investment and grow it over time. There's no shortcuts. That's the bottom line. There are no shortcuts to creating wealth. There's no such thing as quick, easy money. Although with that said, there's a slight caveat, because a lot of people threw money at NFTs, cryptos, and some meme stocks blindly and made a lot of money. But that's not the norm. So that's my point. That's not the norm. And it shouldn't be taken as that's the way it is going to be going forward. Right. So I think a lot of people think that is how easy it is, but it's actually not.
Yeah. And the one other big thing that you had mentioned before in terms of the first three, then what's your fourth, what's your fifth?
Right.
It does seem that, having a better understanding and learning and taking a course like one of the ones that you have to offer enhances those chances, obviously, for greater long-term growth. But also, I wanted you to expand a little bit on that concept of, if you really want to be a real investor and not only, make money on what you invest, but if you really want to level up and do it the real way, you would have to have a good understanding so that you can take that next big investment and feel comfortable with it, because we're not talking about small potatoes. The game gets bigger, essentially. And I think that is something that someone that may have made a quick buck here or there in this first era, when they have that loss and maybe they pull out of the game and they think, well, I did it a little bit. Well, if you want to really take it, from someone like you that's sort of worked with larger accounts, what do you have to say about that? Maybe, leveling up to that next level of that fourth, fifth investment, when you're really kind of, you really want to put your money where your mouth is, so to speak.
Well, I think there's two things. Number one, there's something called portfolio diversification and asset allocation. So portfolio diversification is, so if you have, let's say, $10,000, I think it's very important to note that with your $10,000, you should never put $10,000 into one or two specific things. Now, a lot of people that I see on the Wall Street Bets pages post pictures of their accounts, which I don't know why they do that anyway, but it's something you should keep. I don't post pictures of my online banking, right, and show everyone. It's just something you kind of keep your cards close to your chest. It's something that you own it. It's your business. But a lot of people decide to show what they're invested in and how much they've made or how much they've lost, whatever it may be. So going back to portfolio diversification, point number one is never, ever invest all your assets into one specific stock, one NFT, or one crypto. You want to spread your diversification into a few different asset classes, right? Or rather, you don't want to be wholly invested into one, because that's a lot of risk. Because if that bombs out, you lose most of your money. So you want to spread your risk. And also, portfolio diversification in terms of, or asset allocation would be, you don't want to be all in meme stocks or all in crypto or all in NFTs. You want to diversify, what you're exposed to, because at different cycles or different times in the cycle throughout the markets, NFTs might perform or they might come down. And if they come down, you want to make sure that your cryptos are up and your stocks are up, or vice versa. So you want to just make sure that you monitor that correctly and appropriately. And by doing that, you need to have an education. So it goes down to, I'm not saying you need to sit and study and go get a degree in finance to be able to manage your own portfolio, but you need to just constantly be learning. I'm constantly learning. I've been doing this for 15 years. I've worked on a trading desk for literally 15 years, actually, maybe even 16 now, up until I decided to leave investment banking and start my own business. But up until then, it was about 15, 16 years. But I'm also always learning. I'm always watching CNBC or Bloomberg TV, trying to learn, understand more, trying to figure out why I got a certain trade wrong. I get trades wrong all the time. I get a lot of trades right too. I'm trying to figure out, why did I go into that stock? Did I not do my research properly? I don't want to make those mistakes again. And it's always, I'm always learning, trying to figure out what to do next. How am I going to invest my profits from the most recent trades? I don't give those profits up. A lot of people do that. So again, it goes back to the first three trades. What happens in your fourth and fifth trade? Once I've made money on three trades, I want to take that profit and I want to leverage it up. and try and just build and build and build and build over time and not give it back and go back to point one, right? So how do you do that? You got to have education. You got to understand how things work. You got to understand portfolio diversity, asset allocation. You got to, and most importantly, you actually got to understand risk management, because without risk management, without managing your stop losses, without realizing or, taking profits at a certain point in time on a certain trade, or stopping out in a trade and deciding that's enough loss in a certain position, without these certain risk parameters, you're always going to be behind. You're always going to, or you're not going to maximize as the way you should. And the way to maximize is by having a slight education and just, learning by doing some courses like mine, someone else's courses, or just reading up on the internet about all these different aspects of the market. But again, in my course, I teach it A to Z, step by step. So that's why I think my course is the greatest, Jeremy.
Yeah, absolutely. And I know that we could obviously talk about this all day long, and I would love to, but I do know we want to save a little bit for next time. Is there anything else? Because next time I have on my list here that I want to get into for next time a little bit about foreign investment, because something that had never occurred to me was that a lot of our U.S. market is owned by foreign investors, and
right.
that U.S. people, if they were so to wanted to, could invest in foreign markets. So that's something I'd love to touch on in the next episode. But for today, I think that is everything that I had to ask. Was there anything else that you wanted to add?
No, I think that's it. I think it was a great second episode of the Stock Investor Studio podcast. I'm glad we could do it together, and I hope some people found that useful. Just my general message is markets are there to create wealth, and I think if you can create some wealth for yourself, you need to understand how to build on that. Don't give it away. And by not giving it away, you need to understand how not to give it away. And by doing that, you need to educate yourself, as I've said. So I think if you're thinking about it, or, you're thinking if you should or shouldn't, I think you should. And be wise. Remember that it's your money. You've worked hard for it, invested appropriately and correctly, so that you can, get the most benefit over the long term. That's really my message for the day.
Awesome. I appreciate it, Dan. And anybody out there, friendly reminder, stockinvestorstudio.com. You can get the A to Z course and now the new meme stock course. So head over there, make sure you grab it, because you'll be a better investor, and your money will be a lot safer. I think it's fair to say.
All right, cool. Thanks, guys. Thanks for listening. Thanks for joining us. Thank you, Jeremy.
Thank you, Dan.